Our guest for the day, Avinash, Gorakshakar, founder and head of research at Avinash Mentor.
For the afternoon edition of Fast Profit. This one's from Bharti from Bangalore. She had a couple of one. Fractal was one, but the earnings are due today for Fractal, so we will pick up those queries starting tomorrow as well. But her query on Oil India, she's holding 20 shares, bought at 495, and asking if she should continue to hold or exit this particular counter. Avinash, coming to you, welcome to the show, and thanks as always for joining in. What would you suggest Bharti to do at this point of time with Oil India?
Yeah, good afternoon, Puneet. My sense is, I think Oil India is a company which is more on the upstream side. So, I think if crude prices go beyond 85 to $90 a barrel, then I think you could see a big upside for Oil India. I think in the very near term, I think it's better that the investor holds on to these shares because considering the kind of geopolitical situation currently between US and Iran, I think there is very, large possibility that oil prices could flare up. I think in the very near term, at least for the next 3 to 6 months, it's a hold. My sense is if oil prices cross 85 to $90 a barrel, that would sentimentally be positive for a player like Oil India. In fact, the oil prices definitely would act as a near-term trigger for the stock. So considering that it's a hold, I would not be surprised that next year should be a better year. But the oil price increase is the near-term trigger for the company.
Okay, all right. So that's you coming in on oil. Mohan is calling us from Bengaluru. Mohan, a very good afternoon to you. What's your query about?
Very good afternoon. I just wanted to know, can I buy this Swan Defense and Global Industries at this time for a long-term perspective?
Okay, all right. Avinash, I'll take this up with you since he's looking at this from a long-term perspective. Do you think Swan Defense is the counter that you can enter right now?
Yeah, I think most of these companies, are sitting on a very large order book. As far as Swan Defense is concerned, it's one of those companies which got demerged, from the main holding company. And I think if one were to take the next 12 to 18 months, then I think definitely one could look at buying into the company. The company has a decent order book. I think execution is something which the markets are waiting. So probably, if the investor can hold on for the next 12 to 15 months, and obviously if numbers start coming in as per what the execution cycle is, then I think one could definitely expect a decent upside. So I think definitely one can buy, but take a time frame of 12 to 15 months.
Got that view, Avinash. But the next question that's coming in.
So I'm looking for a long-term perspective.
Long-term prospect. Got it. Avinash, let me come to you. It's one of those most volatile counters, right? And retail investors love it. Roughly around stock was trading at 35-40 rupees in 2023. Hit an all-time high of 270 and since then has been volatile. Do you track this counter by any chance, and what could you offer Bharat at this point of time?
No, I think SPL Infra has a very decent order book, and I think most importantly they are into water projects, and a lot of arrears are expected from the government. There have been pending cases where the company has is likely to be awarded these payments very soon. So my sense is that despite the fact that the investor has entered into a slightly higher level, he needs to stay invested here for the next 12 to 18 months. This business is largely government oriented, so collections come at a pretty low pace. Payments are slow. The working capital cycle is elongated. But I think if the investor can keep the faith in this company for the next 12 to 18 months, I think definitely numbers for FY27 are going to be a lot better. In fact, the quarter 4 is supposed to be one of the best quarters. So we are expecting a decent quarter 4, and I think FY27 should be a lot better. So I think he needs to hold on despite the fact that he's gotten at the higher level. Continue to hold for the next 12 to 15 months.
Zinc now. Now a viewer actually bought it at 400 rupees. And this is Raj Sekharan, and he's holding more than 10,000 shares of the counter. And hence we've picked up this query. He's almost in profits, almost 20 lakh rupees at this point of time, given it's at almost close to 600. He's asking if he should partially book his profits right now, Avinash, while continuing to hold the rest. Would you advise that at this point of time?
Yeah, I think Puneet, he's made a very decent amount of profit. So I think, he can obviously book some profit and ensure that his capital is recovered. And I think most importantly, silver as a commodity is likely to show a steady gain in the coming few, quarters. Not only industrial demand, but social demand, festival demand is also raking in demand for silver. And Hindustan Zinc being the only player in the private sector to make silver, they should benefit once the capacity increases. The markets have been very positive on the fact that going forward in April to June, you could see some benefits of the expanded capacity available to the company. So yes, I think he can book about 40-50% profits, and the rest he can hold on. The next 12 to 15 months, I believe silver prices will continue to remain buoyant, and that will help Hindustan Zinc quite significantly.
Yes. So I wanted to know whether it's a good time to enter Indian hotels or ITC hotels, given that it has come down quite a lot in the last couple of weeks or so.
Okay, got your question, Shiv Kumar. I'll take this up with Avinash. Avinash, what's your overall view on the sector, first of all, considering that, operational metrics are slowly and steadily improving with a lot of additions that are happening for all of these names, and between IHCL and ITC, which one your pick would be?
I think the hotel sector continues to do well. In fact, October to March is the season, and we have been finding that average room rentals have steadily moved up. In case of ITC, numbers were pretty solid for quarter 3, and I think quarter 4 is also going to be pretty solid. Last year they made a profit of around 630, 640 crores. This year they should end with about 750 odd crores. The other company, Indian Hotels, has also done well, but I think the performance was weak, but the guidance was quite solid. The company expects a very strong quarter in quarter 4. Apart from that, there are many small hotels like Lemon Tree or, for that reason, Chalet Hotels. I would say that Indian Hotels definitely looks attractive. And possibly, if this can be acquired by the investor, he needs to give in a time frame of at least 12 to 18 months. I think numbers would gradually improve, but they have the benefit of scale and the geographical reach. So Indian Hotels definitely looks more basic, positive.
Definitely one that we wanted to pick before we go, and so he's invested 26,000. His profit is almost 5.95 lakhs, and our producer being very quick with calculating that as well. But Avinash, at this point of time, what would you recommend Gupta ji to do? Because he's made a lot of gains. Should he continue to hold just because of the buying price? What would you recommend?
No, I think, Puneet, 26,000 is already something which he has already, earned. So I think, he should actually definitely book out 50% profit, because I think there are many other growth sectors like banking, auto components. I think the trick in the market is that you got to compound your wealth by looking at various companies which are into various growth cycles. So I think Infosys has made him a lot of money, but I think he needs to take out that capital and reinvest it in something else. I mean, maybe 50% is something which he can easily book out, and maybe the rest 50% he can hold on. But clearly, I think he needs to put his capital and capital should be reallocated to other growth companies. I think there are many companies within the banking, auto component stocks. So that would be a better choice.